So what's the point of paying points? I mean, my team rarely charges any kind of origination or discount points. I'm not an advocate for spending more money at the closing table when you can capitalize on those funds for other investments. But what is an origination point or discount point? Well, a point equates to 1% of your loan amount. So if you're buying a $500,000 home, putting 20% down, your loan amount would be $400,000. So that point would cost you $4,000. It can add up quickly when you're talking about higher purchase prices. An origination point is typically around a fee. It's a lender-based fee. You'll find it a lot with banks, with internet lenders, or with VA loans where they'll just charge an origination point. A discount point is prepaid interest. It's actually paying down your interest rate. The general rule of thumb, but not always the case, the general rule of thumb might be that one discount point, so 1% of your loan amount, might drop your rate 1/4 of a point. So it might drop you from, say, 4.5 to 4.25. So what's the benefit? You have to do the math. You have to figure out the break-even point. There's really two factors that go into whether or not you pay points. One is how long are you going to be in the home? So let's take a really simple math equation, right? So a $100,000 loan, if I pay a point, in this example, maybe I drop my rate from 5% to 4.25 if I pay 3 points. So on a $100,000 loan, that's $3,000. I'm gonna save between my payment at 5% versus 4.25, I'm gonna save about $45 a month. So if I take that $3,000 and I divide it by the $45 savings, that gets me 66 months until I break even. So am I gonna live in the home for longer than 66 months? Because if I'm gonna hold that mortgage for a full 30 years, it might or might not make sense. But the second factor comes into play. What kind of cash flow do I have at the time of closing? And is that the best use of my cash? Can I make more money elsewhere in other investments? Can I make more than 4.25 if I take that money and replace it in another investment? Now, if you're talking about $3,000, it's not a ton of money that's going to be going to work for you. But if you're talking about that $500,000 home where a point is $4,000, now you're talking about $4,000, $8,000, $12,000. Can that money do better for you elsewhere? Or does the payback make sense? So when we sit down, a lot of homeowners want to control that house payment and that budget. We can go through all of those numbers and determine whether or not paying points is right for you. Well, my name is Nicole Rueth with the Rueth team at Fairway Mortgage, and I would love to support you in those decisions and so many more as you use real estate towards building your long-term wealth. I look forward to and hope you call me soon. Bye-bye.